Today, we have with us Siddhartha Bhaiya, Managing Director and Fund Manager at Aequitas. As we all know, he is one of India's best performing fund managers with around 38% CAGR over the last 10 years and 21x absolute return since its inception. Today, its AUM stands at $500 million US. He is known to outperform the markets by investing in high-quality small and mid-cap undiscovered companies with a combination of growth and contrarian stock-picking approach. He has in total 20-plus years of experience in the Indian stock markets. By qualification, he's a chartered accountant. Prior to Aequitas, his other stints included working with StratCap Securities, Principal PBAMC, and fund manager at Reliance Capital Asset Management. Now, without further much ado, I will request Siddharth to start the session on how to crack the multi-bagger code. Thank you.
I have this. Hi, thank you everyone. Thanks a lot for coming here. I just want to start off with one basic thing, right? Today the Nifty is at 20,000. And I want to ask you one thing. Where do you think, raise your hands, okay? Where do you think the Nifty is going to be 40 years down the line? 2 lakhs, anyone? Does anyone think it's going to be at 2 lakhs 40 years down the line? 4 lakhs? 6 lakhs? 10 lakhs? 10 lakhs तो मैं भी हाथ नीचे कर दूँगा. Right, so I think yes. I don't know where it's going to be 40 years down the line, but let me take you through some little bit of history. Because at the end of the day, the lessons of, we learn about the future from the lessons of the past. So let's look at the Sensex. Sensex was started in 1979 at a base value of 100. If I would have told you Sensex is going to become 1,000, laugh. If I would have told you Sensex 5,000, you would have said this guy is mad. But today the Sensex is at 65,000. Right? I started my career in 2001. 9/11 was the day when I first reported to office. 7 o'clock I see planes going into the World Trade Center. Nifty that day was 800. Today Nifty is 20,000. So 20 odd years, the Nifty itself is a 25 bagger. Sensex is a 650 bagger over the last 40 odd years. So that is a 15x return for every single year. We also have data for the small and the mid cap index. What has Sensex done over the last 40 odd years? It's compounded at 16% CAGR, which is not okay. 16% is a good number, right? And that also is the rate at which our money supply has grown. So what I can tell you is whether it is long-term money supply, whether it is long-term revenue growth for companies, whether it is the Nifty in the long run or the Sensex, whatever we want to look, they're all going to grow at the same rate. In the long run, in the short run, there can be variations. Your profitability margins might not grow at the same this. So here you have the multi-bagger. All you have to do is invest in the SIP, do an SIP in the Nifty or the Sensex. You all have your CFA calculators, go back home, extrapolate it to 40 years, you have the Nifty number. Obviously, we might not grow at 16%, 12% dal do, because we are a bigger economy. But you will still get a crazy number. That's it, the presentation is done. You all came for multi-baggers, this is the multi-bagger. Right? So, simple, very simple. Right? At some point in time, I'd done that if you started off with an SIP of 1,000 rupees in 1979, and 1,000 rupees in 1979 was also a very small number. Not very big and not very small. 1,000 rupees was a decent, per month was a decent number to invest. And if you would have increased it by 10% every year, I'm assuming salary, bare minimum utna to badha hi hai. Right? So, abhi sab log, my team is all there. No, we'll pay higher than that, don't worry. But if you would have done an SIP, 1,000 rupee monthly, increased it by 10% every single year, today your portfolio would have been more than 100 crores. I don't know the exact number, I'd done that study 2-3 years back, but I'm pretty sure that time it was 60-70 crores. Today it will be a much higher number. Simple thing, right? But the next point I want to make is very few people make money in the stock markets. Don't go by what is happening in the last couple of years. Everybody's made money in the last 2 years. So this is the perfect time when Buffett says the tide is high. So I would judge how much money you have made after the tide has gone away. So, but historically you see very few people have made money in the stock markets. Forget multi-baggers, forget nifty returns. अपने बिल्डिंग में 4 लोगों को पूछ ले, बोल देंगे कि नहीं यार स्टॉक मार्केट सट्टा है, इधर मत डालो. Why have people not made money in the markets? Right? Why have people not made money when it is plain simple that your Sensex is a 650 bagger? Your Nifty is if your wealth has not multiplied by 25x in the last 15-20 years, then maybe you should not be doing, or maybe you need to relook at how you're going about investing. So why is it that people are not making money? Number one reason, gambling. Right? I cannot walk into my building without somebody asking me, अरे क्या अच्छा लगता है? अरे यार 2 टिप तो दे दे. Right? I think we spend more time buying a shirt than we decide what stocks to buy. You cannot gamble away your money. Right? That is one form of gambling. The biggest form of gambling in India right now is derivatives. It is India's Las Vegas the NSE is India's Las Vegas without any of the glamour. At least उतना पैसा लेके Vegas जाओ, you'll enjoy more. पैसा तो दोनों जगह you are going to lose. Right? At least Vegas नहीं जाओ तो Macau चले जाओ. But the point is, there's data. 90% of volumes today in India are on the derivatives exchange. There is SEBI data which says that 90% of people or retail people in the derivative segment are losing money. So effectively, 80% of the people are losing money. Not exactly 80%, but what I'm saying is the balance who might be doing a combination of derivatives and stocks are also losing. Because I know जब भी mid cap small cap में selling आता है तो margin selling होता है जो क्योंकि लोगों ने derivatives में नुकसान किया है. Right? So one is that. Third biggest IPO. Correct? Let's go to the IPO slide for the day. IPO, call IPO market as India's Kumbh Mela. 12 साल में एक बार प्रमोटर लोग और रिटेल इन्वेस्टर इकट्ठा होते हैं स्टॉक मार्केट में. Right? Yesterday, somebody, a couple of days back, somebody very senior from Bloomberg was in our office. And he said that before joining Bloomberg, and he was one of the first employees of Bloomberg in Asia, I was an investment banker in the early 90s. And he came and told me Banjara Hills or Hyderabad was the big market apparently for IPO at that point in time. And he said Banjara Hills में जितने भी promoter है, उन्होंने सबने IPO से पैसा लेके अपना बंगला बनाया उधर. So IPO is, look at the data. We did some analysis in 2021 when we were doing a Twitter Spaces session about the IPO since 2004. So since 2004, the Nifty is a 10 bagger, or at least it was then, probably now it is much more. But what we realized is there were more than 600 IPOs, but 354 of those companies which came out with the IPO actually delivered negative returns. That is, nearly 60% of the companies had negative returns when you were actually in a very good market. The Nifty was 10x over that period. Okay. Second, you look at it, nearly 30% of those companies either got delisted or vanished or became penny stocks. Only 25 stocks became 10 baggers. And within that, 9 stocks went negative in the first 3 years of listing. So IPO is, as they say, IPOs. And that is what we are seeing in the last 2-3 years. Look at the number of IPOs, look at the crazy things that are happening in the IPO market. And what are people trying to do? People are trying to sell for listing gains. That is it, right? That's gambling, isn't it? This is the history. Go back to history. And I said Kumbh Mela, 12 साल, because 12 साल में या तो आप मार्केट में रहते हो और आप सीख जाते हो या आप मार्केट के बाहर चले जाते हो, फिर नए लोग आते हैं. Next PD, right? So this is Our data from 1992 to 97. Look at the number of IPOs that got listed during that period. Nearly 4,000 IPOs. अब I don't have data for the 80s and the 70s. I'm pretty sure ऐसे ही कुछ होगा. Unfortunately, India में उतना पुराना data नहीं मिलता. 4,000. How many companies are listed today in India? Any guesses? 7,000. 7,000. Out of which 4,000 were listed only in the 90s. And then after that, till 97. After that, I have not added. Maybe there were another 2,000-3,000. And then there were companies which were listed in the 80s and 70s and 60s. I'll give you one important statistic. I don't have this, right? But I'll tell you, 9 out of 10 companies in India eventually delist. And yet, people want to go and do IPO investing. IPO investing क्या होता है? It is basically gambling. Correct? So you have to look at the data over here and it tells us. So, right, shall go back. Third is, majority of people are very impulsive decision makers in the stock markets. You have to be a very rational decision maker as far as this is concerned. Fifth, the most important point is leverage. Right? I know so many people who are perpetually leveraged. And if you're perpetually leveraged, at some point in time, you're going to have a global financial crisis, or you're going to have a COVID-19 or something like that, and you're going to get wiped out. Right? Warren Buffett has said that compounding is the 8th wonder of the world, which we saw in the first slide. I'll say leverage is the number one sucker punch in the world. And it punches you very hard. It punches. All the people who sell in panic are the ones who are leveraged. Majority of them, they're forced to sell. And in India, it is compounded. It is compounded why? Because one, you're in derivatives, and second, derivatives में speculate करने के लिए आप margin में stock देते हो. So it's a double whammy. It takes only 1 month for you to lose your entire net worth as far as at least the stock market is concerned. And then those guys go and don't allow their next 3 generations to invest in the stock markets. Right? So, to me, it all boils down to why people are not able to make money. These probably are the 5 basic tenets. Gambling. Right? We'll go through it in detail, but as to how we can overcome some of these things. These are so basic, right? But I can only tell you from my own experience. It's not that I have not committed any of these mistakes, but I've learned from them. Right? Although I don't think so in 20 years I've ever applied to an IPO. Definitely in Aequitas in 10 years we've never applied to a single IPO. Right? So these, according to me, why can't you make money in the stock markets? You have to go back and think. Okay, this is the data. Nifty in the last, say, 12 or 13 years is a 10-bagger. And if you're investing every single month, then you should have much higher returns than a 10-bagger. Then why is it that we don't have those returns? You have to go, this is the first, Nifty is a multi-bagger, but majority of the people don't make money. Correct? Forget whether you're delivering Nifty returns or multi-bagger returns. So to me, what is the most important thing? What is the most important thing that you need to do? I call this as a surgery. I call this as a surgical operation. You have to stop the bleeding. You have to stop the bleeding. What is the bleeding? The bleeding is your capital. बहुत सी बार लोग आते हैं वोडाफोन में सुजलॉन येस बैंक सब शेयर होल्डर होंगे अरे 10 ही रुपया तो जाएगा 10 नहीं जाएगा पूरा कैपिटल जाएगा and more than that we'll discuss later on. It's about habits. Correct? It's about your habits. It's about so you have to prioritize survival first. You have to protect your capital. Every decision that you make in the markets, okay, you have to increase your probability of going right. You have to minimize your drawdowns. Again, I want to emphasize on the fact that increase the probability of going right. Every time you buy a stock, ask yourself, right, what majority of the people think, यहाँ से upside कितना होगा? the first question you have to ask is यहाँ से downside कितना हो सकता है? Does anyone before buying a stock think कि यहाँ से maybe Nuresh because he's a technical analyst and he's pretty experienced, right? But does anyone here think that before buying a stock, it's a natural bias, right? We think 100 में लिया ये तो 200 हो जाएगा. But does anyone think कि ये 50 रुपए भी हो सकता है? You have to think that. What is the probability? What is it? So again, I told you the problems. I'm also going to give you how to overcome some of these basic problems. Multi-baggers we will go later on. But these are the first. So you have to stop the bleeding. Okay? How do you stop the bleeding? What is spit? Spelled reverse. Okay? I can tell you one thing. I've worked with some of the smartest brains in the industry. And I have never asked anyone for any tips. People work with us in Aequitas, they join, and you'll never find anyone within our team after 2 years going ever out and asking, kya lena hai? You're all qualified, you're all this. Why it's so important not to go about asking? I've been a fund manager and I've worked on the sell side also. So when I was on the sell side, stock चल जाता तो fund manager credit लेता था. और अगर नीचे चला जाता तो phone करता था, रे stock क्यों गिर गया? So you're never going to build conviction. If you go wrong, and if you've taken the decision on your own, you know why you've gone wrong. So one thing, life is a lot more easier for me because I don't hand out tips. So I can walk, very freely within my building without anyone, और नहीं तो वही मार्च 2020 में सब जूते लेके पहुंच जाते हैं घर पे कि भाई तूने ये दिलाया था क्या? And it happened with me, okay? I was a fund manager in Reliance in 2009, global financial crisis, and there was this company, Heikel. We had invested in it, and with everything else, the stock went down 70%. And I had made one of my school friends buy that stock, and I had something like 5 lakh shares in the portfolio. And he calls me up right in the middle of the financial crisis. यार तूने Heikel दिलाया था, क्या हो गया इसका? तो बोला यार अब तो टाइम लगेगा. अच्छा मैं पूछा कितना शेयर लिया? उसने बोला 25 शेयर लिया. Like here I have clients paying for my blood और तू 25 शेयर के लिए फोन कर रहा है. Right? So most important, build your conviction. Learn. It's not easy. The most easiest thing is to go and stock market में टिप देने में कोई नहीं लगता है. 2 ही चीज चाहिए, नाम और प्राइस. तीसरा क्वेश्चन पूछोगे तो नहीं यार उसने बोला था इसके लिए. Right? So one is that. Second, as I said, derivatives. I told you, right? Just avoid. Just get rid of your derivatives account. The data is there, right? Do you know that who's making derivatives, money on derivatives? No, it is the global FIIs. If at all you make that much money, you pay 42% taxes on your derivatives transaction. All the FIIs are based out of tax-free jurisdictions, out of Cayman, out of Mauritius, they do pay 0 taxes on the derivative transactions. It's like going to a casino and knowing it is rigged in their favor. The data is there that there is an 80% probability that you're not going to make money. But the problem is everyone thinks that they are part of the other 20%. Right? So get rid of your derivatives, you give yourself a much better chance. We don't have a derivatives account. I don't think so anyone in our team has a derivatives account. I've never had a derivatives account. After I completed my CA, I bought this book by John Hull, which is good on derivatives and everything. And I started reading and I said, सीख लूँगा तो problem हो जाएगा. तो बंद कर दिया. Right? So I still don't know what a butterfly spread is. Nothing. I don't want to get into that. So give yourself, again, what is it? What are we trying to do? We are giving ourselves a better chance of first not losing money. We'll go back to the multi-bagger things and everything later on. Okay. Third is IPO. Don't become a chain smoker. Right? Everyone who's a chain smoker started off with a single fag. दोस्त ने दे दिया यार एक सुट्टा मार ले चल. And before he knew, he became a chain smoker. It is your behavior which will decide whether you're going to, in life or in the markets, it is your behavior which is going to decide whether you're going to make money or not. So if you get into the habit of making a quick gain out of an IPO, you'll get into that habit. What will happen? Out of 10 IPOs, you will get allocation only in one, where you will make 100%. Then the 11th IPO, you will get 100% allocation and the stock will go down 90%. And trust me, nobody will be able to sell, क्योंकि वो आदमी कभी लॉस में नहीं बेच सकता. तो हिस्ट्री है. So don't get, it's a matter of habit. Investing is a matter of habit. If you're doing IPO speculation, then you need to get rid of it if you want to make money in the long run. And the data is there, right? 4,000 IPOs in the late 90s. And after that came the Vanishing Companies Act. I don't know, not many people from the 90s. But there was actually an act passed by the parliament which was known as the Vanishing Companies Act. So सब promoter पैसा लेके भाग गए. कुंभ मेला. अभी भी वही हो रहा है, अभी QIP में भी हो रहा है. Companies are raising more money in QIP than they have made in 15-20 years of operating their business. Best है. Who doesn't want to be a promoter? मैं भी सोच रहा हूँ Aequitas का IPO होगा, सपने तो देख ही रहा हूँ. No, I'm just joking, but this, right? Leverage. So I think there's a very interesting, and we all know it, this, right? Bezos went to Warren Buffett one day and asked, what you do is so simple. What you do is so simple, and why is it that people are not able to follow you? He said, everyone wants to get rich quick. Everyone wants to become rich quickly. And how do you become rich quickly? Broker funding, right? Broker is very happy to fund you, isn't he? Brokers make more, we'll come back to brokers also later on. Fifth, you guys probably follow me on Twitter or you've read some of my tweets. And last couple of years I've been fairly bearish on the markets. I've been scared, right? But good thing is I also don't listen to my own thoughts on the market. So I invest every single month into our AIF. And our portfolio the last 2 years has done extremely well. So as I said, luckily I don't listen to myself, and I don't want you to listen to me or anyone else. Do a very simple thing. A lot of our clients are invested with us. They ask us, what is the right time to invest? And I just keep on telling them this simple advice, that invest regularly. And nobody does it. So forget, we'll go into timing the markets and a lot of these things, later on. So here we've looked at 3 aspects rather. First is the Nifty is a multi-bagger. Majority of the people are unable to make money. As I said, don't look at the last 2 years, go before that, right? And we've looked at the pitfalls, and I've shared some of the things that I personally do, right? I don't have a derivatives account, or we don't have a derivatives account. We invest regularly, right? No leverage, this. So this is it. Now comes the point where, okay, that is fine, but I'll give you an interesting anecdote. 30 years back, the good old days, probably you guys don't know, but good old days of, ring trading. It was the brokers who made money. If you bought a stock, you got the highest price of the day. If you sold the stock, you got the lowest price of the day. And you paid 2% brokerage. And the retail investors never make money, only South Bombay brokers made money. Correct? Now, since then, 30 years later, today there is absolute, and yes, they got a lot of insider information, all the access and everything was, market was driven by insider information, everything. Today, 30 years later, a retail investor, according to me, is at par with an institutional investor. You get access to the annual reports, you get access to the con call transcripts, you get access to all the announcements, right? There is no gap as far as information availability is concerned. right? Everything is available. What is available to me is also available to Devesh here, right, who's sitting out of Indore. So why are, and yet it is only the broker who's making money, zero da, 3,000 crore profit. Probably higher than profits of any other AMC, I don't know, Ria. So why is it? Why is that with all the information available today we cannot go and complain that, oh, it's not a level playing field. Maybe back then it was a level playing field. Why is it that people are not able to make money today? I think that's what we're going to discuss. It's a mindset issue. We need to change our mindset. Next slide. Okay. Previous one. So what is it that we need? What is the mindset that we need to make multi-baggers? And again, guys, what I'm telling you is what I have learned. I wasn't born with this. I have learned this through my experience. What is the first and foremost thing that you need? It is time in the markets. Right, multi-bagger sabko chahiye, but the biggest thing about a multi-bagger is you have to hold a multi-bagger till it becomes a multi-bagger. If you don't give the stock an opportunity to become a 10x or a 50x or a 100x, how will you have a multi-bagger? If you book profits at 50% gain or 75% gain, then you can't go about searching for a multi-bagger. So the first and foremost thing is get your gut right. Do you have it in you to hold a stock till it becomes a 10 bagger or a 50 bagger? That's the most important thing. It is your vision, it is your mindset. Okay? What does that need? What it needs is, the first thing that it needs is time in the markets. Multi-baggers don't happen over 1 year or 3 years or 5 years. I'll give you 3 classic examples. Okay? And we've heard about this. And you all guys know about this. And first is Rakesh Jhunjhunwala and Titan. How many years did he hold Titan for? More than 25 years? Right? Radhakishan Damani. We know about his holdings in Gillette and we know about his holdings in VST Industries. How many years did he hold? More than 25 years. Right? Number 3, the Inam Group. Your cousins. Right? Look at their holdings, whether it is an MRF or whether it is, in fact I had done a blog on the 250 bagger story, which was one of their minor holdings, which is Bannari Aman Sugar. Maybe you should, we can share the link with you guys later on. But they've been holding shares for more than 25 years and so many companies, Infosys, MRF, and I don't even, Carbo Random and the Murugappa Group. So what does that tell you? These are some of the 3 most successful investors that we know of in the country. What is the biggest learning from these guys? That you have to hold stocks for a very long period of time. You will not get multi-baggers in 1 year or 3 years or 5 years. So our average holding period at Aequitas is 5 years, which I think is very low. Yes, but in our 7 out of our top 10 holdings that we've held on to, we've held on for more than 8 years. What does that do? One is it defers taxes for you. So our AIF, our overall churn ratio is less than 10% in 4.5 years. So annualized churn ratio of less than 2.5. And we've barely paid any taxes. Look at the benefit that you get because of deferring your taxes. So first, you have your time in the markets is very, very important. Titan is a classic example. Why Titan is a classic example? Because हर किसी को मालूम है. इंडिया में ऐसा कोई बच्चा नहीं है जिसने स्टॉक मार्केट सुना नहीं है और जिसने राकेश झुंझुनवाला और टाइटन नहीं सुना है. कितनों ने पैसा बनाया? राकेश झुंझुनवाला को छोड़ के किसी ने पैसा नहीं बनाया. He went and told all his friends. I know a few of his friends. हाँ बताया था राकेश भैया ने, लेकिन हमने बेच दिया, हमसे रहा नहीं गया. So he had this to hold on to it. Correct? So first is you have to hold on to a multi-bagger. It's easier said than done. Right? What does, go back to the previous slide. Right? But what does it involve? right? It's not going to be a rosy picture, right? आपने ले लिया and Titan just kept on going every year. You're going to see drawdowns. And you're not just going to see drawdowns, you're going to see multiple drawdowns. I don't go and tell my clients कि your stocks can go down 50%, नहीं तो सब पैसा निकाल के चले जाएंगे, but that's the fact. You have to be prepared to hold stocks for a 50% down. This is one of our top holdings. We bought this in 2013 when we started at 9 rupees. And it's been more than a 30 bagger for us over that period. And we've had more than 8 times where the stock has corrected by more than 30%. In some cases more than 50%. There's not going to be Titan chart, the next chart that was there. There also you saw more than 8 drawdowns. In fact, it corrected by 70% in the global financial crisis. Imagine if you're Rakesh Jhunjhunwala, your biggest holding is Titan, and it is down 70%. Your net worth is down 70%. But that is the nature of the markets. You want to have multi-baggers, you'll have to learn to ignore. But वो time पे Titan का price 70 रुपए से 25 रुपए आया था. We all know what price is today. So hindsight is a good this. So one, as I said, you have to hold for a long period of time. Second is, you have to be prepared for drawdowns. Right? Again, the next thing, the point what I want to tell you is, to make money, let's go to the next slide first. Returns are never linear in the stock market. Right? Today I tell about and everybody is convinced. Right? But here everybody was asking me, "ये क्या कचरा लेके बैठे हो तुम?" So one, and what I have noticed is, majority of the people sell it just before the big rally happens. Why? Because it's darkest before dawn. It's darkest before dawn. Returns are never going to be linear. You'll have to wait a number of years before you actually at times realize this. So it's a 40 bagger for us. But look at here, from 2014 to here, we barely made any returns. And look at it here, probably corrected 60-65%. Imagine at that point in time, to be honest, even I was despondent. Today I don't want to come and tell you, "Nahi, main to Shivaji tha, I was not worried about it." Of course I was worried. You're holding a stock for 10 years, right? The stock from the peak has corrected 60%. But what did we do? Unlike others, we didn't sell. So you have to be a very reluctant seller in the stock market. Okay. This point we will again discuss later on. Shall go to the previous this. I talked about it being darkest before dawn. Trust me, how many of you, if I was speaking in March 2020, how many of you would have attended? Honestly, March 2020, if I was speaking, how many of you would have attended? नहीं यार मैं खुद नहीं अटेंड करता, तुम तो झूठ बोल रहे हो, मैं खुद ही नहीं आता मैं खुद ही नहीं आता हाँ तुम लोग that's my team right? But the point what I'm saying is, 2020 small caps were a bad name. Everybody was hiding in Ritik. Okay, everybody sold their small and mid caps here. It was at March 2020, you had the index had corrected 28% from the peak. The small cap index for 13 years had delivered negative returns. 13 years, it first hit 9,600 or whatever level in 2007. So for 13 years, you look at it, negative returns. अब logically सोचो, forget everything else. मैं आपको बोलता हूँ कि ये asset class ने 13 साल तक negative return दिया है. आप क्या सोचोगे? Wow, what a time to invest. Correct? आगे चल के अच्छा करेगा. If I tell you ये real estate है बॉम्बे में 2007 में 4,000 रुपए स्क्वायर फीट था, आज भी 4,000 में मिल रहा है. लोग है ना? But nobody bought this. Makes sense. Logically, it makes sense, right? That this was one of the great opportunities. The market has given 18% CAGR over that period. The small cap indexes get this. But here, everybody sold out. Why? Because it was darkest before dawn. And that is what the market is going to do once every 10 years. It is going to shake you out. 9/11, global financial crisis, right? COVID. Once every 10 years, when your memory is faded, the market will come and FO. I'm sorry, Ria. Ria specifically came and told me, please mind your language. But I'm hoping everyone is above 18, so pardon my, right, come back, Shail, come back to this. So I told you, right, returns are never linear. They are all, if you want linear returns, put it in fixed deposit, but then you'll get mediocre returns. So now the question is, how do you identify whether you bought it? And again, as I said, I'm speaking right now with the benefit of hindsight. But here, how do you identify whether you've bought a dud company, or whether means ये ARPA और ARCOM भी हो सकता था, या any of the other companies, or how do you have a good stock on your hand, right? So I think I'll put a very simple thing to it. Shall just go to the next slide. Right? This one is the previous one. I'll give you a very simple hack for this. Right? And this is an hack which I would have given my younger self. If you've not made a lot of money in the markets over the last, say, so many years, or if you're learning, or if you're, even if you're not learning, maybe you can give it a shot. For the next 3 to 5 years, okay, every single month, we're all earning some money every single month, right? Every single month, buy one new stock. Buy a new stock and try and diversify across industries. Okay. What will happen is, after 3 years, you will have 36 stocks. After 5 years, you will have 60 stocks. Okay. Now, what is it? What is this? You're paying a very small tuition fee to the markets. After 5 years, there will be some stocks where you will have lost money. There would be some stocks where you have made money. And there would be some stocks which have probably given only nifty kind of returns. Right? A lot of things about concentrated bets and this and that. Once you learn the ropes, you can do it. Correct? But if you concentrated your bet in Suzlon or R Power or any of Unitex of the world, and you kept on buying on the way down, you're finished. Correct? So invest across sectors. Build a diversified portfolio. After 5 years, you will have a fair understanding, and then research your companies. This is, I'm talking for people, I'm assuming, who are looking at researching companies. So after 5 years, you will have a fair idea about where you went wrong. What was the characteristics of a multibagger? And then maybe later on, you would have learned your lessons, and then maybe later on, you can work towards building a concentrate. But you will never be out of the game. The biggest problem is you lose money and you're out of the game. So don't lose money. Do this. This is something that I would have told my younger self, that do this. हम सोचते हैं एक महीने की सैलरी है तो हम सोचते हैं यार इसका 10% ही लेते हैं 20 नहीं लो ना आपको तो 40 साल कमाना है. Right? This is what I tell my analysts now, that you should not put anything less than 1 month's salary. Second, the second thing, advice that I would give my younger self is, I would have been better off if I would not have sold a single share. And I'll tell you some of my this. So again, time in the markets. It's not the timing of the markets, or it's not about going in and out of stock. I had, as an analyst, I had picked some fantastic multi-baggers. But again, it's a learning curve. You have to pay the tuition fee to the markets. Right? But I learned from them. Majority of the people don't learn from that. Go back to the previous slide, Shane. So what else is required to find multi-baggers? We discussed markets multi-bagger. We discussed why people don't make money. We discussed what is the 6 basic things that you can do, right, to this. We discussed a couple of tenets: time in the markets, willingness to go through drawdowns, right? What are the other things that you need to this? There are a lot of times in the markets where you will make money, or whenever you make money in the markets, or whenever you make money in the stock markets or in a stock, it's a combination of 2 things. It is skill and it is luck. every single money or investment that you make involves an element of luck, for the simple reason that investing is all about the future and the future is unknown. Right? The fact that a par's realization or EBITDA per ton, which used to guide at 8,000, has gone to 56,000, is a matter of luck. Neither they, neither I foresaw that. But the skill was we held on to it because we had faith and belief in that company, and because we were monitoring that company at every quarterly. In fact, go back to the a par chart. Right here, right before this big move, you saw this dip. It looks very small right now, but that day it was down 13%. And imagine you have held this stock for so long, and फिर बाद में खराब result आता है, stock goes down 13%. बहुत गालियां दी उस दिन, बहुत गालियां दी management को कि ऐसा ही है. Then the presentation came, and all of a sudden, Pratiksha and Riya came and told me their order book is through the roof. One of their shipments has got delayed by 400 crores. And they've guided a very strong number for the next 2 quarters for their cables business. Now, that part was the skill. Next day, we actually went and bought the stock. Correct? So there's an element of luck involved in every decision that you make, and there's an element of skill. The bigger problem is people are not able to distinguish between that. I see so many people, they make money in one stock, and then they said, I'm the next Buffett, and chalu ho jate. And then the tide goes down, and we know who's naked. Right? Maybe I'll also be. You never know. Time tells. Right? Come next. Right? So one is get your luck every single time when you've made money. Look at it, whether it is luck, whether it is skill, how much of it is luck, how much of it is skill. One more thing I want to add here is you do not judge your decision on the basis of outcome. I'll give you an example. We bought Sangvi Movers, right? And the stock, it was the largest crane rental company at that point in time, fantastic management, everything good, right? The stock ran for a very long period of time, and I felt it was a good company. The net block was more than 2,000 crores, market cap was down to 300, 350 crores. And then what happened? COVID came, everything happened, stock corrected even 60% from there. Okay. Now at that point in time at the bottom, was I wrong? I wasn't wrong. Because the investments that we have made, all our thesis was right. Everything, it ticked all this. So our decision was not wrong. Correct? And there have been times where I've made money on stocks because it was a bull market, but my investment decision, underlying decision was wrong. So that's an important thing to understand, that in a bull market you can make money and you can still be wrong. And in a bear market, at the bottom of a bear market, all your stocks will look wrong. And at the top of a bull market, everyone looks like Warren Buffett. Right? Correct? So that is this. Errors of omission versus errors of commission. There have been so many multi-baggers we've missed. So many multi-baggers. They don't hurt you. What hurts you is what you've bought. So errors of omission, you have to, it's a bull market. Everybody in my team every single day is coming pitching ideas to me, and 1 week later they're saying, boss, up 50%. Right? But they don't, I'm fully invested. So even if it goes up, it doesn't matter. But if I borrow money and invest, or if I invest in a stock and it actually goes down or is wrong, it is going to hurt my capital. So errors of omission don't hurt you as much as errors of commission. I think, guys, I hope I'm not boring you a lot with my this. We've already discussed. You cannot. I would not. If it was on borrowed conviction, I would have been out of a PAR or Elicon on any of these stocks in March 2020. We did not. March 2020 to now, we own the same stocks. Our perception hasn't changed. Market's perception about those stocks has changed. Right? So that is where there was no borrowed conviction. It was our research. our analysis, our understanding of those companies. Two important things, particularly if you are on the sell side or if you're on the buy side, right? There has to be, this is a very stressful job. You're actually, if you're managing money for somebody else, it involves a lot of stress. Ask me, March 2020, 2009. I've been through those times. It's a very, very stressful this. You have to lead a healthy lifestyle. And I know of too many people who've died in their 40s because of the stress. So you have to focus, and that is where this is. And the last, but the most important point is, what are your reading habits like? What are your reading habits like, right? Like I was just telling Ria that it is great to attend, to listen to people talk and listen to this. But the best form of communication, according to me, is between the author and the reader. It's a one-way communication. All the things that I'm telling you, all the things that I'm practicing, it's out there. It is nothing new that I'm telling you. Everything is out there. But what is it that it will help you when you go through those situations? Either you can learn from your own mistakes or you can learn from somebody else's mistakes. Like one of the best things that happened to me, I read Buffett very early in my career, and Buffett said never invest into textile stock. Ria. Right? And I just took it. I just took it as saying, okay, if he said it, I'm not going to invest it. And ऐसा कोई नहीं होता है जो टेक्सटाइल में कभी इन्वेस्ट नहीं करता, बिकॉज 3-4 में तो दिखता ही है कोई ना कोई स्टॉक. तो एक बार तो मन ललचा ही जाता है. आरसीएफ, जो भी बॉम्बे नया आता है पहले आरसीएफ खरीदता है इतना लैंड देख के. राइट? और टेक्सटाइल स्टॉक कोई ना कोई हमेशा लेता ही है. बट लकीली फॉर मी, आई रेड बफेट एंड आई सेड, he said don't invest in textile stock. And it's only after 10 years I realized that textile stocks do well when the general market is doing well. So I'm better off buying something else rather than buying textile or anything. It's a dead business. I've never seen a textile plant being sold. Maybe Indocounts managed to sell it, but or rather they bought it, right? But have you ever seen an M&A happening in textile? It is a business with, there exit barriers, right? It means there's zero liquidation value. Entry तो भिवंडी चले जाओ, जयपुर चले जाओ, सब उधर स्पिनर्स ही स्पिनर है. कमाते क्या है? टैक्स की चोरी करके. Right? Do you know that there are more than 2,000 textile stocks listed on the stock exchange? Yes. Most of them perpetually quote below book value. Nobody knows it, right? ऐसा पुराने अभी काफी सारों की तो चांदी लग गई because of lower parallel and real estate prices going up and the mills and everything coming up. So you can either read and learn from it, or you can experience it the difficult way by using your own capital, losing money, and this. Yeah, we've done this. So we've covered what is the mindset that is needed. You need to read, you need to have a healthy lifestyle. Trust me, don't ignore these 2 points. Just don't ignore these 2 points. You have to read. Even today I read 2 books a month. Okay, at least I try to. There are times where I don't, but that's... So what is the power of a multi-bagger? Okay, I tell you guys, okay, and we'll teach you to identify, later on we'll give you some of the skill sets. Assume you build a portfolio of 10 stocks, okay, and amongst that 10 stocks you're a horrible stock picker, and 9 of those stocks lose 50%. But because of luck, 1 stock becomes a 10-bagger. I'm saying you're a horrible stock picker, and I don't think so you can be a horrible stock picker. I mean, it takes a lot of, derivatives chhod doge to automatically you are better off. So it takes real effort to be a horrible stock picker. So you have only 1 10-bagger and 9 stocks which lose 50%. And then we all know where Nifty goes in the long run and all those things. What are your returns? You still make 45% on your portfolio. That is the power of a multi-bagger. And what if you have a 100-bagger? What if your friend was Rakesh Jhunjhunwala and you listened to him and you stuck with him? Your portfolio would have gone up 10x. your entire portfolio would have gone up 10x. So in your lifetime, all you need is 100 bagger to become rich. And what do you need to make 100 bagger? You need to hold it. You need to hold it till it becomes a 100 bagger. Right? And what is it that stops people from holding a multi-bagger? What is the emotion? What is the single biggest overriding emotion that stops people from holding a stock till it becomes a 10 bagger or a 50 bagger or a 100 bagger? Fear. Right? Get rid of that fear. लोग सोचते हैं 100 का 200 गया 150 हो गया तो क्या? वो होगा 150. Right? So that is the single most important thing that you need to do is get rid of that fear. I call a 10 bagger as a tiger tasting a blood. If you have tasted a 10 bagger in your life, you're not going to settle for anything less than that. But your first 10 bagger requires a lot of hunting. It requires a lot of efforts. So try and get that first 10 bagger, try and get that first 100 bagger. And trust me, after that, you're not going to settle. The mindset. Right? And while we were preparing for this presentation, you know what I realized? That within our team, nobody even talks about 50, 70, 100% returns. They only talk about after 1.5, 2 years. They only talk about multi-baggers. Because that's the mindset that we have cultivated. Right? 100% returns is trading gains for me. I'll be honest with you. It's the mindset. I might not make, again, please understand, I'm not going to make a 10 bagger on every investment that I'm going to do. But I am going to give myself a shot. I am going to give myself a shot at making that 10 bagger or 100 bagger. That is what I've learned from Rakesh Jhunjhunwala or Radhakishan Damani or the Inam Group. Right? Next slide. Right? Go to the next slide. So, this is me writing research reports on the sell side. Luckily, I was contrarian even then. I wrote reports on these 3 companies before anyone else wrote. Right? Go back, Shell. And what are the market caps of these companies? When I wrote Kotak Bank, market cap was, I wrote a report, was 748 crores. Right, Bajaj Finance market cap was 218 crores. At that time, it was known as Bajaj Auto Finance, and Havells market cap was 160 crores. And nobody had written a research report on these companies. Obviously, I did not hold them. Otherwise, you would have seen my names on the papers also. But do I have any regrets about this? I sold them pretty early. No, I have no regrets, because in the stock market, you cannot have regrets. Every single decision that you make in the stock market is a mistake. Every single decision. You buy a stock at 100 rupees, it goes to 99, you're wrong. You buy at 100 rupees, pura stock nahi aaya, it goes up, you're wrong. You buy stock at 100 rupees, 10,000 shares, you could have bought 15,000 shares, you're wrong. Every decision in the stock market is wrong. Right? And as a husband also, every decision is wrong. Right? So, but what I did is I learned from them. What is it that I got right about these stocks? What were the why is it that it attracted? Why did I write? I was the first one. It was an NBFC Kotak at that point in time. I was the first one to write a research report. And then Ria saw the report and said, "Boss, आप भी 50 पेज का report लिखते थे." Right? I was the first one to. There was a time when there was no IR or any of these things in Havells or Bajaj Finance or any of those things, right? And I'm sure a lot of it also in Bajaj Finance involves luck because of the demerger and everything. I'm not trying to claim that I identified it in terms of that, but at that point in time, what were the characteristics? We'll look at what are the characteristics. We'll give you an hack on why, what is it that, why was it that I covered those stocks even back then? Shell. Right? So the biggest thing The biggest thing is, majority of the people think that multi-bagger means small cap. Small cap means, और अभी तो सभी multi-bagger, कोई तो whiskey कहाँ तो चला जाता तो stock is on fire. Everything is a multi-bagger today, right? And I'm a small cap fund manager, and I've been a small cap fund manager for the last 10.5 years. And I can tell you one thing, majority of small caps are junk. So the biggest myth is that you get multi-baggers out of small cap. And we'll give you a hack later on. We'll tell you how to identify multi-baggers even within small caps. But the first thing I'm going to tell you is, majority of your small cap is junk. I told you, 9 out of 10 companies eventually delist. वो 5 से 10 साल के बीच में प्रमोटर देखता है कितना पैसा निकाल सकता हूँ, पहले आईपीओ करता है, फिर क्यूआईपी करता है, फिर एक और क्यूआईपी कोशिश करता है, जब नहीं होता है तो फिर पैसा निकालना शुरू कर देता है, फिर डिलिस्ट हो जाता है. And these are large caps. These were large caps and these were very popular names. Today they might look at junk. But whether it is Arcom, whether it is R Power, whether it is DLF, Jet Airways, Yes Bank, Suzlon, Unitech, and I'll name so many of them, India Bulls Housing Finance, DLF, DHFL, India Bulls was part of Nifty, right? They all became small caps, penny stocks, delisted. So myth that large caps are safe, myth that small caps are multi-baggers, right? In fact, today if you look at it, all the Nifty stocks, okay, all the Nifty stocks of today in the late 90s were small caps or mid caps. Marico came out with an IPO at 250 crores, 270 crores at 10 times earnings. IPO में 10 times earnings, even then Parachute was the biggest brand. You look at Infosys, TCS, Wipro, HCL Tech, all small caps in the 90s. The IT industry had just boomed. Look at all the private sector banks, Axis Bank, TCS, ICICI Bank, HDFC Bank, Kotak Bank. All small caps. We saw the market cap of Kotak, right, 780. All small caps in the 90s. You look at all the pharma companies, Sun Pharma, all were small companies. All were small companies. You look at Asian Paints, Pidilite, Marico, again, very small market capitalization. They were not even part of the A group shares, a lot of them at that point in time. तभी तो कोई बाकी और नहीं होता था, वो A और B group ही होता था, and Sensex होता था. So myth that one, large caps are safe. No, they're not safe. Myth that you're going to make multi-baggers out of small caps, not necessarily. But I'll tell you what is the one ingredient that makes a small cap a multi-bagger. Okay. Third point, market capitalization. Raise your hands if market capitalization is the first thing that you look at in a stock. Right? And मैं नहीं देखता हूँ. But I'll tell you what, it is the stupidest matrix that has been created by the market. It serves convenience for everyone. It serves convenience for merchant bankers because the market capitalization बड़ा है तो सब funds आ जाएंगे. It serves convenience for the fund managers because market capitalization बड़ा है तो you can buy, sell shares. How is market capitalization important? What is more important? The thing that is more important is revenue, profitability, right? The growth rates, the valuation. Market cap by itself has got no meaning. Look at Zomato and Paytm and all these guys, they got listed at such high valuations. But नीचे आ गए. You have to look at market capital. So never look at market capitalization first. Look at the underlying valuations. Look at the underlying revenue, profitability, growth. A lot of those factors, right? Simple funda. What is multi-bagger? Multi-bagger is you buy a large company at a small valuation, and then hope that the valuation will go up, isn't it? That is what a multi-bagger is. That is what happened with Kotak or Bajaj or Havells or any of these companies, that these were large companies even then. You look at the valuations, we bought them at 0.1 time, 0.2 times market cap to sales. At 4 times earnings. They were still large companies. But their market. So that is your objective. Your objective is buy large companies at lower valuations. So I talked about, a hack. What is it? I told you most of the small cap is junk. I won't take a lot of your time, right? How much time have we? Oh, so okay, we've gone 1 hour into this, so I'll probably wind it up in 10-15 minutes. What is a small cap hack? I told you. The first and foremost thing when you buy a small cap is buy an industry leader. Do not buy anything in the name of small caps. And you will be able to identify that. Do not buy anything. If you buy industry leaders, and then I told you buy one every month, I'll give you even simpler hack. Go to Screener. My friend Ayush has created a fantastic this. It is available free. Run Screener every quarter, less than 10 P multiple, net cash on the balance sheet. Kharid lo. You will not lose money in the long run. If you keep on over diversify. Don't listen to all those Twitter who say, run concentrated bets and everything. They never publish their own balance sheets. So, buy industry leaders. How do we define industry leadership? For us, industry leadership is two things. Either you should be number one in the country, or you should be the most efficient. And I have a very classic example for this. Suppose you're a student, right, like Riya, and you come first in school from 1st standard to 7th standard. Are you going to bet that this guy is going to fail from 8th standard to 10th standard? Or are you going to say that this guy is more likely to be amongst the, if not first, amongst the top 3? Right? That's what you're buying. You're buying an industry leader. He's an industry leader for a reason. And there are so many industries out there. When we bought APAR, it was an industry leader. When we bought Phenolics Cables, it was an industry leader. When we bought Gujarat Ambuja, it is an industry leader. It is number 1 in Asia. And you are able to buy these companies even today if you look around at this. So first and foremost is, if it is not an industry leader, do not buy it. Okay, some bigger industries like an IT or a pharma or maybe banking, maybe you can look at amongst the top 15, 20 companies. But in that case, don't go beyond the top 1,000 companies in terms of revenues and profitability. One hack, get this done, you're not losing money. What is a multibagger? Is multibagger investing about value investing? Is it about growth investing? Or is it about a contrarian approach to investing? Maybe for me, it's a combination of all three. When you have a confluence of all these three things, that is when you make a multibagger. So first and foremost, I keep on joking in our office that मुझे एक डीमैट अकाउंट बनाना है जिसमें 4 पी का स्टॉक लेना है और उसको ताला लगा के भूल जाना है. Because I've seen so many stocks at 4P multiple go on to become fantastic. Companies like SRF, right? Companies like Deepak Nitrite, all these PI industries, they were all at some point in time available at 3-4P multiples. I talked about Kotak, I talked about Bajaj, I talked about Havells, and we have a lot of them in our portfolio as well. Again, those are errors of omission, though they don't hurt, but I have a lot of, not errors of commission, but a lot of those other stocks which have made a lot of money for us. So most important is valuation. You have to buy. Don't listen to any fund manager, anyone who's saying, give exorbitant P multiples. Nahi. What P multiples right now that you're seeing in the markets have never been, last 10 years don't define the stock markets. We've never seen such high P multiples for such high period of time. This is all because of a lot of money printing and low interest rates and everything, and that is going to correct over a period. Right, the entire S&P 500 in 1979 was available at 8P multiple or 9P multiple. So valuation is the most important aspect. You cannot not ignore it. Okay, buy them at a significant discount to intrinsic value. Second is growth, right? And growth is again something which is, stock market is about the future is uncertain. How do you predict growth? Correct? You cannot predict growth, but you can prepare for it. And you have to go very long period of time, maybe 8 years, 10 years. What is it where industries have not had capital allocation for 8 years, 10 years? You're looking at defense, you're looking at capital goods, you're looking at the power sector. They've all done well in the last 2, 3, 4 years. Why? Because they had not done well for 13 years before that. Small cap index, if you remember, It had not done well for 13 years. Look at those companies. Don't go by the narrative. Growth, again, once it comes in, it is also markets, cycles, life, growth, industries. They work in trends. We have cycles. And cycles typically will last longer than most people's memories. And a contrarian approach to investing. Even back then, right, when I covered Havells, or when I covered Bajaj Finance, or when I covered Kotak, there was not a single sell-side research report on these companies. I was one of the first. It is not about going against the crowd. It is about being different from the crowd. So these are the three things. When you get it right, you have a multi-bagger. And I'll take you through examples. We'll have examples, multiple examples along the way. Yeah. Right? Here are some of our case studies. Right? Guys, these are all stocks where I've already made money. So I'm not leaving anything on the table. So don't even look at them as, this. HEG is a classic example. When we bought it, it was very cheap. It was at 0.6 times sales. The earnings were a little less because the margins were subdued at that point in time. Typically, HEG did more than 30% EBITDA margin. So you can imagine that the margins were very poor at that point in time. In fact, price to sales is or market cap to sales is one of my favorite metrics. If you guys want that, we can discuss that later on this. And the market capitalization was only barely 800 crores. It was the largest, one of 6 graphite electrode manufacturers in the world, out of which 2 were in India, right? And it was a fantastic company. I had visited the plant, I had seen it, right? And there was a big shift which was happening to electric arc furnaces, and demand for graphite electrodes was increasing exponentially. But industries are cyclical, and for the next 4 to 5 years, the industry did not do anything. Everybody in the industry was bleeding. What happens when everybody in the industry bleeds? The weaker players fold up. So Graftech in Europe folded up. And all of a sudden, graphite electrode prices went from $3,000 to $17,000, $18,000. And when that happens, everything flows to the bottom line. And what happened? The stock price from 500, I had bought in 2012. We had bought the stock at 250 rupees. The stock price in 2016, after 4.5 years, was at 150 rupees. So after 4.5 years, what was 6% of my portfolio had become 0.5% of the portfolio, because everything else had done well. What would a typical, and clients used to still call and say, "अरे HEG नहीं चल रहा है, और बाकी आपका portfolio 4-5 गुना हो गया, लेकिन they are still right." And what would any other fund manager would have done is sell it off. But we held on to it because even if it was this, but because we were holding it, because we were tracking it, we all of a sudden saw a lot of insider buying by promoters of both HEG and graphite. We had some connects within the industry. We called them up and they said prices are going up. We increased our position from 1 lakh to 1 million shares within a matter of 3 months. And within a matter of 9 months, we were out at 3,000 rupees. And I have actually written a blog which says that, did we get lucky in HEG? Because who thought? Even the promoters didn't know that graphite electrode prices will go to 13,000. Forget me. So, what was it? One, it was value. It was deep value. On a normalized basis, it was available at less than 3 P multiple. Okay. It was industry leader. I talked about industry leader, right? The growth came in the future. We got a little early. Its stock had not done well even for 5 years before that. But we knew at some point in time the growth has to come, and if everybody in the industry, and it is about the future, it is not about the historical growth. So, and it was a completely contrarian bet at that point in time. 2017, everybody, Twitter was full of HEG when the stock price was at the peak. So, it was industry leader, represented value, the growth came in, and the stock got re-rated. A combination of earnings growth and P multiple is what causes a multi-bagger. Same thing with Elecon. We bought it for nearly 3.5 years. It doesn't always happen, but we looked at this. Stock did not do well. In fact, it went down over there. But again, it's one of the leaders as far as transmission equipment is concerned in the country. It is one of the few surviving companies as far as material handling is concerned. None of you will know about material handling. Because 13 साल में कोल में इन्वेस्टमेंट ही नहीं हुआ था, तो किसी को मैकनाली भारत, ट्रेल, ट्रैक्टर्स इंडिया, ये वो किसी को मालूम ही नहीं होगा कि ये सब तो कंपनी बंद ही हो गई, TRF. So he was the only surviving one and he was limping. But what did it represent? It represented value, 589 crores. Today it has more cash than its market capitalization on the balance sheet at the price at which we bought. Okay. Revenue again, it was at 0.6 times market cap to sales. Probably now it is 0.3 times at the price at which we bought, or even lesser. So your ultimate aim when you buy a stock is eventually the earnings per share, please remember this, should be more than the price at which you bought the stock. It can take you 4 years. How can that happen? Suppose you've bought a stock at 100 rupees and you want the EPS to be more than 100. So what is the first thing that you need for that to happen? P should be less, right? अगर आप 25-30 rupees में लोगे, तो then earnings only have to triple. And if your earnings go higher than the price at which you bought, how can you ever lose money? So that is your point why valuation is important. और इंडिया तो ग्रोथ इकोनॉमी है, आप कोई भी कंपनी देख लो, अच्छी वेल रन कंपनी 18 to 20% तो ग्रोथ करेगी over a 10-year period. There is screener, there is capital line, go back, see 10 years. Any well run company you will realize जो 10 साल पहले revenue था, आज वो profit है. And revenues have grown up in 10 years between 8 to 10x. So any well run company, and we'll discuss all those factors, this. So this is it, the largest transmission equipment company, but कोई किसी को मालूम ही नहीं है, because gears में तो कोई capital goods में तो कोई investment in the whole of India was busy consuming from China, manufacturing कोई नहीं देख रहा था, but it was a great company back then, right? Next, Apar Industries. Okay, we bought it at 300 odd crore market cap. It was the largest in conductors at that point in time. It was the largest as far as specialty oils is concerned. It was available at we bought it at 0.1 times market cap to sales. Best है, अगर आपको कभी 0.3 market cap to sales के नीचे company मिले ना, ले लो. Every single time, obviously you can't go and buy straight trading corporation because उधर तो margin कभी नहीं बढ़ने वाला है. But understand margins, go understand cyclicality of margins and all those things. So this is it. And then you see, and then you have to just keep on holding. So it was an industry leader, the valuations were less, the growth came in at some point in time, it took 10 years in this case, a lot of times it happens immediately. We haven't put the immediate examples here. And then, right, it was a completely contrarian thing at that point. And today everybody loves Apar, but at that point in time nobody was. Phenolics cables. When we bought Phenolics cables, market cap was less than 500 crores. It was at that point in time the largest as far as cables and wires is concerned. Then Polycab took over. They had more than 400 crores of net cash and investments on their balance sheet. In 2007 they had done some, this is in 2013 they had bought, they had entered into some forex derivatives, and for 5 years they had taken a write-off, and that was getting over two quarters down the line. So if you took out the non-cash element, the stock was available at 3p multiple. Okay, it was an industry leader, the valuations were this, and market cap to sales 0.2 times. And then it went from 28 rupees all the way to 720 rupees or something. Market cap went from 500 crores to 16,000 crores. HEG went to 16,000 crores. Apar is today at 22,000 crores. All the companies that I'm talking about are industry leaders. You find them. You still today find them. You have to have the conviction to go and search for it. You look at, say, an Avanti Feeds. It was, right, the largest shrimp feed manufacturer. I just opened the report and it said, Government of India has allowed Vanamai shrimps and we expect 20% growth for the next 4 to 5 years. Stock was available at 3p multiple. 300 crores top line, net cash balance sheet, 90 crore market cap, 30 crore profit. 3P. There was no debt on the balance sheet. And I went and first bought the shares and I told everyone, कि यार ये देख ये है. So the best thing is, when I go and tell everyone ये stock बहुत अच्छा लगता है और लोग नहीं सुनते हैं ना, तो I'm convinced कि ये चलने वाला है. That is my acid test. And then people talked about, oh, in the 90s, all these shrimp feed companies came, और ये सब industry में कुछ पैसा नहीं बनता. मैं बोला, okay, but this is what it tells me, right? 0.2 times market cap to sales is what I bought it. And we then all know what happened. It went to 16,000 crore market cap. And then somebody called and told me what a company 60% ROE करता है. बोला sustainable नहीं है, सब बेच दिया. And since then that stock price hasn't come. So JSL, Jindal Stainless, is one of our current top holdings. We bought it at a market cap of 1900 crores. It is the largest stainless steel manufacturer in the country, even at that point in time. So industry leader. Market cap to sales 0.1. Not done anything for 10 years, 12 years. We all know. And same thing, completely contrary and completely forgotten. And we all know what has happened since then. Today probably, they're doing 13,000 crores quarterly this revenues. Today it is amongst the top 50 companies in terms of revenues and profitability. And we bought it at, Tata Steel paid 12,000 crores for 2,000 acres of land in इसके उसमें 2,000 acre पड़ा है. So you get these kind of opportunities, and if you don't get it at this point in time in this market, there is no need to go and buy. You can always wait. You can always wait. Rather than, आज ही पैसा नहीं कमाने का हमको. Remember Buffett. So that, guys, is all I have to say. The presentation took slightly longer than what I had estimated, and I hope I did not bore you. So, thank you. Thanks a lot. So we can start off with the. When it comes to markets, I can talk and talk and talk and talk and talk.
If anyone has questions.
Thanks, Siddharth, for the amazing presentation and years of wisdom. Thank you very much.
Thank you. Thanks a lot.
Firstly, on the selling part, so a lot of us also on the similar asset management side, we run open-ended funds. We have clients come in on any given day with new money and so on and so forth. So one of the dilemmas is that, like you said, if you have to really have a multi-bag, you need to hold it for a long period of time. But if new clients come in, right, so you bought a stock at 100, today it's up 10x. You think it can be up 10x again, but that allocation for the new client might not be appropriate, right? So
again, as I said, so there are challenges, but if you're in a fund structure, the best part about a fund structure is that there's no compulsion to buy that stock again. You can buy something else, but you can let it run. You're getting me? There is no compulsion if a stock has gone from 100 to 1000. There's no compulsion for you to buy that stock. If you like it, you buy it. But if you don't like it, you can let it run in your portfolio and use the additional money to buy something else. And that is what I'm saying, that you think as you can have a 30 stock, 40 stock, 50 stock portfolio, and you can still make more money this because the same stocks offer you opportunities. We bought a print media company and we bought a paper company. When paper prices go up, we buy the print media company. When paper prices go down, we buy the other one because we know we are naturally hedged, and both of them give you opportunity. And both are industry leaders. And both are available at 4P multiple. So the point is, there is no compulsion to add. You can always buy a new stock. And if you don't get a new stock, don't buy, wait for it. If you don't get it, then be rest assured that 6-8 months mein market is going to tank.
and one more question is, you've had, like you said, you began with sell side, you worked in a fund management company. When did you think that this is a time to be on my own? And what led you to do that?
The distributors, the wealth managers. Right? No, but honestly, I think one of the best decisions that we did is for me personally was starting Aequitas, right? And what it and I I've been in an institutional framework, and I realized that it's impossible to make money when you're part of an institution. Because the first thing that you're interested in is, I keep on telling that every turn of the cycle I will lose my job. Because March 2020 I had cap goods, I had power, I had infra. Who was going to keep me? तुम्हारे पास में HDFC नहीं है, कोटक नहीं है, you're out. You're getting me? So it's difficult to make money in institutional framework. So what we do at Aequitas is we allow ourselves to fail. You can go wrong, no problem. And unfortunately that cannot happen, because look at HEG, I was so wrong for such a long period of time. And if you were responsible to somebody else, he would come and ask you HEG, the first thing you will do is sell HEG. 0.5% तो है, बेच दो. But बेच दिया तो फिर आप कभी नहीं ले सकते stock. Right? So yes, I did that decision around 2013, and we did a lot of things when we set up Aequitas. We did a lot of things based on our learnings, right? Like we said, we'll go only direct to clients. We will not market ourselves, right? We'll restrict the amount of money that we take into it, because you're a fund manager, right? And you're on the fund management side, and you realize that money always comes at the top. सब लोग जितने भी लोग फंड मैनेजर को गाली देते हैं, आई माई सिंपैथी विद देम, बिकॉज़ दे डोंट नो कि हमको पैसा तो आता पीक में है ना. मार्च 2020 में कोई नहीं दे रहा था. वी वर प्लेइंग क्रिकेट. नो जोक्स. माय को फंड मैनेजर निशित टोल्ड मी कि आज आके बता देना. मैं बोला ठीक है, बता दूंगा. You were actually playing cricket because there's nothing to do. We had invested. What do you do? Right?
Okay.
Yeah. Hi, Siddharth.
Yeah, hi Siddharth.
Yeah, hi.
So many takeaways from this session, and very insightful. But the major takeaway that I'll take from this session is hold, don't sell.
Yes.
So, like most of the professionals who are here started just their professional journey and who are in mid 25. The major investments that most of us are doing here is goal-based investing. So we have some aspirations to be achieved, say 5 years, 10 years down the line. So when I come to that stage when I want to invest that money and put it somewhere to achieve my aspirations, how do I achieve that if I keep on holding those investments?
How do you achieve that? Right. So I'll give you an example. My boss, Imran Contractor, and from him I learned a lot. And I tend to listen to people, and sometimes from the wise people I just listen and I don't argue with them. And that point in time he came and told me that your first million is going to be the most difficult. Today I'll say that your first 1 crore is going to be the most difficult. And I just took it to heart, and it took some time to reach that level, right? And I kept on telling my colleagues later on in other organizations that your first million. But they said, नहीं, capital कहाँ से आएगा? हमको तो trading करना पड़ेगा. और ट्रेडिंग करने में कैपिटल ही चला गया. 1 million तो आज तक नहीं आया. So the point is, you will have to be patient about it. There are two things you have to do. One is, you'll have to be patient about it. You have goals. One thing which we do as a team, and which I tell everyone who joins our team, is put down your net worth goal. What is it that you want? I had a net worth goal which I used to look at every single day. Say, this is what I want to be by the time I'm 30. And I reached that by 29. So you're automatically, even today, every single day we wake up and we say we want to protect that 30% CAGR. It's a difficult task, and I know at some point in time, with period, it might not sustain. But that is what, you have to be goal oriented. And you have to be patient. By the way, we ended 10 years at 29.9. Can you believe it? How bad can luck be? Right. So you have to be goal oriented. You have to be patient. Don't get rich quick. Get rich slow. Look at Buffett. Even at 93 is investing long term. And that is why he's rich, right? On ट्विटर पे लोग जम के गाली देते बफेट को, ऐसा है वैसा है. मैं बोला $1 billion तो कमाओ यार, फिर उसके बाद में जाके बोलो. So listen to what people are saying. At times and any wise person, I don't know whether I qualify as wise or not, but there's so many other people who are much wiser than me, listen to them. I just listen to them. I did make my set of mistakes. It's not like what I am giving is also a set of mistakes that I made. But I made mistakes, I course corrected quickly. I learned from other people's mistake. So one advice I'll say is, you're starting your journey, you have another 40 years. Buffett became a billionaire, I don't know, at 60, 65 or something. Only after that age. Yes, I know we all want to become rich quickly, but that's not going to happen. I promise you that's not going to happen. And if it happens, it's also going to go away quickly. You know, one of my friends told me in 2013 that you're so convinced about your stocks and you're such a good stock picker. Why don't you leverage? And we know from 2013 where we went. I said, मैंने leverage कर लिया और मैंने पैसा कमा लिया, तो मेरा विनाश guaranteed है. I will let you ponder on that. मैंने leverage कर लिया, मैंने पैसा बना लिया, तो मेरा विनाश guaranteed है. Think about it. Go home and think about it. Yeah.
Thank you.
Yeah, hi Siddharth.
Hi.
Couple of questions. One is if you could share some thoughts on position sizing, because obviously some may have 15, 20 stocks, some people may have 50, 80 stocks, right? You may have a 10 bagger, 20 bagger, but if let's say if it's just 1% of your portfolio, it's not going to make a lot of difference. So how do you decide on that, on which stock to give more weightage? And the second bit is, all the case studies which I saw, HEG, graphite electrode mania, or for that matter, Gujarat Ambuja exports. A lot of these companies are driven by the commodity prices, right? Now, if I were to look at this more from the traditional DCF perspective, where, as Professor Damodaran says, that 80% of the value comes from the terminal value, right? Now, if that bit is coming from a terminal value, how do you develop that foresight to have that view on the prices at such a longer term?
It's very interesting, this. And I'll answer your second question first because I forgot the first question, so you'll have to ask me again that later. But the second part, right? Very early, I did a DCF valuation and I went to my boss. And he tore that report, Imran. He tore that report and fake diya. And I'll tell you what, DCF is a complete bullshit. You could have done DCF on so many of the technology companies. You could have done a DCF on Walmart. What happened? When Walmart was the biggest company in the world, did you see any disruption happening to Walmart? Because Amazon wasn't born also at that point in time. Right? So, to me, DCF is, even Munger says, right, that I've never seen Buffett do a DCF. So, DCF in the practical world doesn't work because it's a very dynamic industry, right? We've given you some examples of commodities, but we have bought CCL products, we've bought, say a Nilkamal, we've bought Heritage Foods. These are all consumer companies as well. And I can give you examples where consumer companies are also available at 10p multiple. Hindustan Lever and Pidilite and Asian Paints and Marico were all available at less than 15p multiple in 2009. I bought entire pharma pack at single digit p multiple. Forget that. 2000, we have that chart, Ria? Or did we put that? IT. Okay. November 2016, majority of our IT stocks were available at single digit p multiple with net cash on the balance sheet. So DCF, according to me, right, don't go into that. You have to buy stocks and you have to monitor them on a quarterly basis. You cannot, if you're a professional investor, DCF mein to one variable you change and anything can happen. That is true. I did Havells pay DCF, वही report फाड़ के फेंका था. I went to him, तो उसने बोला ये variable change कर दे तो ज़्यादा है, सब price ही sell हो गया. So I don't think so in the practical world it works, to be honest with you. And to be honest with you, I am, what they teach in finance and what works in the practical world is completely different. You have to understand the concepts. You have to understand the concept of WACC. Right? Do you understand that all these lofty valuations were because of WACC? Because WACC was zero. What happens if WACC goes to double digits? your stock prices are going to crack and crack badly. That time nobody was talking. That time everybody was saying, कोई भी P multiple दे दो, stock low, P multiple बाद में. So DCF doesn't work in the practical world, and I would not 80%. No industry you can say terminal value is 80%, because we're highly disruptive. You look at, you could have bought Mercedes, Benz, and everything, and so many other stocks, and look what Tesla. What happened to Tesla? Don't look at it now. Go back. Can you buy Tesla at these points, this price, if you do a DCF valuation? You cannot. You could not have bought Tesla even say at 90% of the current market cap, because if you did it on a DCF, nothing would have fit. Because terminal growth rate in US cannot be more than 4%, 5%. But the point is, if it grows at 50% for 10 years, then people think in the markets that 50% growth is for perpetuity. So at highest, in my observation, at peak profitability, you get peak PE multiples. And at bottom profitability, you get bottom PE multiples. I can give you n number of examples. If that was the case, then DCF should have corrected, no? At cyclically peak margins, the PE multiple should go down, but it doesn't happen that way.
Yeah, and the first question was more on the position sizing.
Yeah, the position sizing, what we do is typically when we build a new portfolio, 16 stocks, 6% each, 96. Why 16 stocks? It gives a good level of diversification. Second is, why 6%? Because we don't know which one stock is going to do better than the other. You're getting me? Coming to an individual level, I would say first learn the ropes, then focus on the positioning or the position sizing. You can easily go 15-20% of your net worth on a stock and then shit bricks for the next 3, 4, 5 years and lose your confidence. It's all about confidence, it's all about learning. So don't worry too much about the positioning size right now. As I said, even if you follow that 36 or 50, 60 stock rule that I'm talking about, you're going to be better off than a lot of other people. And it will also allow you to understand other sectors. It's only when you own a stock that you actually do research. I call research as dating and owning a stock as marriage. And when you're researching, everything is hunky-dory. It's only after you own a stock you realize 3, 4, 5 years whether things are right or wrong. Right?
So you mentioned couple of very interesting things. One, you should have stomach to take 50-70% drawdown, and probably 9 out of 10 stocks will get delisted at some point. So where do you draw the line saying that okay, when it's falling 50%, it's not in that 9th category, it could get delisted at some point? Because you mentioned HEG as an example, but it's just the blue sky policy of China which led to the whole growth. If the blue sky policy never came in, HEG would be still there only where it was. Maybe at 3,000 it would have gone to 5,000. It would have never gone to 18,000 dollars electrode prices. So where do you cut that?
So again, as I said, there are 2 elements to it, right? The whole industry was bleeding. HEG and graphite were one of the most efficient players in the world. Okay, so if these things would have continued, maybe instead of 1, 2 players would have. These are cycles that play out, right? Second, it was always a good company. It was an industry leader. And I didn't know that stock price is going to go to 18,000 or, the market cap was going to go to 16,000. Nobody knew. Not even the promoters knew it. Forget this. That is the luck element. That is where you track. Right? By the time they reported record profits, we were out of the stock. Because, and then what I went, and then the common sense comes and I said, we're not looking at this stock for the next 10 years. Because all the companies have made so much money, or promoter bail hota hai, wo jaake naya capacity dalega. So this industry is going to have oversupply, and it is not going to make money for the next 10 years.
But then do you think about cutting that line? Okay, maybe it could fall in that 9th category and maybe I should at some point just sell it off.
The point what I'm saying is, if you follow those first 4, 5 kind of a lot of the other things that I've said, you will minimize the losses, right? Today, after 20 years, I can say, okay, we're not going to lose a lot of money. We've lost money, a lot of money, or say more than 90% only in 2 stocks. in 10 years. But that is only something that you're going to learn over a period. That is why the positioning size. Even if you're going to lose 5%, one stock, two stock will go, right? What will happen? In fact, on the other hand, I see so many portfolios where there are 100 stocks, but they've made money only in one HDFC bank or one or two blue chip names. And then I go and ask them that question is, why only these two? Why could you not identify more like this? And yet their portfolios are doing well. You're getting me? So, forget about the losers. If you're sensible, as I said, given you some of the hacks, right? Sub 10p multiple net cash on the balance sheet, you're going to minimize your losses. But at the same time, if you get 100 bagger, you're through.
We'll have one more question and then we'll close.
Siddharth, if I may ask the question. So a lot of folks at Nalanda, I mean, they follow a similar principle and they have achieved very impeccable track record over the last many years. Now, what they say is, when asked about exiting a stock, they would never pay attention to valuations. So how do you determine that valuations have actually run way far out of the fundamentals? So any practical ways in which we ourselves can assess for our portfolio companies that this valuation is way too much and we need to actually exit? Or do you follow the principles of, say, Nalanda guys, that until my initial thesis doesn't go wrong, I would never exit that stock?
To be honest with you, I will sell only on valuations. I will buy only on valuations and I will sell only on valuations. Right? Because valuations capture an euphoria. Valuations reflect panic in the markets. So, and things go bad only after the valuations go crazy. Simple, it's simple economic cycle, right? Why did everyone all of a sudden get into the innerwear industry? When every promoter saw Page Industries is 50,000 crore market cap, you know, right from Aditya Birla to Arvind to everyone got into that industry, right? When did Bajaj and Hero Honda decide they want to get into Enfield territory? When Eicher Motors became part of the Nifty. It is capital allocation, right? When everyone saw that Reliance Power listed at 20,000 crores in 2007, without having any power plant, every promoter wanted to set. So to me, it is always euphoria. It is euphoria, it is market capitalization, which attracts newer players. For Asian Paints has been around for 50, 60 years, number one company growing at 18-20%, right? Nobody wanted to enter that business. All of a sudden, Asian Paints market cap hit 3 lakh crores. Grasim decided I can invest 5,000 crores and get 1 lakh crore market cap. Simple hai. It is, so to me, selling is always on valuation. Right? And people have different ways of managing positions.
Sure, thanks a lot.
Or even apart, right?
Can
There will
I,
be multiple levels where you would have thought that this has gone overboard or something like that, right? I mean, how do you get to that?
So to be honest with you, you don't sell everything at the top. You sell along the way. And I was just discussing with my co-portfolio managers that in a bull market, every time you sell, you will appear wrong. You sell your positions. See, you're not holding 5,000-10,000 shares, you're holding lakhs of shares. You cannot expect that at the peak I will exit everything. Because अगर आप peak पे आप छुट्टी पे हो गए तो बेचने के लिए आपको 2 दिन ही मिलता है. और आप छुट्टी पे रह गए तो खत्म. So you have to sell along the way. But the point is, if you have a 100 bagger, and I'm talking from an institutional perspective, if you have a 100 bagger and if you're even holding 10% of your original quantity, you've made a lot of money. You cannot carry your position because we are responsible. Our performance goes out on a monthly basis. Some of these stocks can also correct 25-30%, and if it becomes 25% of your portfolio, you have to trim it down. Correct?
can I? I've been waiting.
Yeah, one last.
So, can you little bit about your process of identifying these stocks? I mean, what are the factors that you track on a daily, weekly, or quarterly basis that
So
make
we have done a few Twitter Spaces sessions on that, right? Maybe you can go on our website and you'll find some blogs on that. We have a corporate presentation where we have a detailed slide on how we go about what is our daily routine. Our daily routine is very different from what everyone else in the industry does. right? Any new analyst who joins, they're super excited, everything. After 1 month, they realize this is the most boring and dull job. Because first 6 months, first 1 year, all you're doing is corporate announcements and newspapers. That's it. उसमें खत्म ही नहीं होता उनका, टाइम ही नहीं निकल जाता है. But that is our daily routine. We're not talking to brokers, we're not reading broker reports, we're focusing on the raw data, the raw documents, which is the newspapers and which is the corporate announcements, right? So you'll find a lot more, if you just Google, you'll find.
Okay.
I don't know whether that's the right process or not, but yes, maybe you can look it up and improvise it in your own way.
This was a really wonderful session, Siddharth.
Thank
Thank you
you.
so
Thank you,
much.
guys. Thank you.
Thank you so much for having.
Thank you.
I will invite Namit Arora to give some closing remarks.
Thank you, Siddharth, for a very insightful presentation. You can stay on just for a minute. So as you can see, it's a Friday evening, and we've never seen such packed halls. It's a tribute to you and your team. So on behalf of the entire CFA community here, many thanks to you for taking the time, for your candor, and many compliments to you for delivering 30% over a decade. So more power to you and your team always. And thank you very much. Thanks to Kunal and the entire team for organizing this, and we hope to have you back again. Thank you.
Thanks a lot. It was a real pleasure. Thanks for, and some of the questions were really insightful, so thank you.
We have a small gesture. Please accept.
Okay. Okay. Thank you. Thanks a lot. Thank you.
Thank you once again, Siddharth.
Thank you.